Hi, this is Joe Shahada from Top Tier Capital. Well, today we had the S&P 500 and pretty much right at resistance. Now, we've been in this long-term upward trend for many months now, and that's defined by this orange channel here. And kind of in the middle of that channel is this blue line, and this was a trend, a short-term trend here that we broke, another short-term trend here that we broke, and we kind of went back up into that trend here recently. And we've broken it 2 times here in a row pretty quickly. We're kind of flirting with it, you know. Now we tried to break into this upward trend again today. We hit new highs and we failed, and now we closed below that line, only marginally. But if we close definitively below that line, I tend to think that prices will move lower. Now we're going to run right into resistance here, or support rather, at this orange line. And it's about 1530-ish, but I wouldn't be surprised if it gets a little overextended, because we got kind of overextended many times here when we tried to correct. Now, if you remember last time we broke this trend, we just went right up into new highs again. And this could easily happen again, but we usually don't have it happen 2 times in a row so quickly right after each other, where it just breaks trend and then it keeps going. Usually it's a failure. This is your early indication. This is your warning shot back here. And then when we get it again, that's a sign of trouble. So definitely got to expect higher prices moving forward, though. As long as we're in this trend, we got to assume higher prices. If we can break it, then I would for sure be looking for lower prices. So nothing necessarily telling you to get out yet, but it's definitely telling you to start getting worried if you're just sitting there, you know, with no risk management whatsoever. So a couple other things to worry about. We have the RSI down here. It's hit overbought conditions 3 times in a very short period of time. That's not good. We also have the RSI trending down while the market's trending largely flat. So that's usually kind of a divergence going on there, usually an early indication of possible reversal of trend. So definitely look out for that. But for now, we just kind of have to assume higher prices. But I kind of have a way that we might want to play this one. I'll talk about that in a second here, though. This next chart I have is a chart of all the indices since the beginning of the year, and this is the percentage returns of all the indices on top of each other here. And now the color in the background gets more vibrant as the rally gets stronger. So we're as vibrant as the color could get pretty much over here. Now we're starting to come down from there. We usually don't get, that usually doesn't keep on, you know, this strong for this long. It's got to correct. So obviously all the indices are up. That's why they're all blue. So the lines, by the way, are from the top down. We have the Russell, the Dow, the S&Ps, and the NASDAQ 100. And you can clearly see we're all in uptrends. Even the NASDAQ is kind of stronger. It was sideways for most of the year, and then we kind of went a little bit higher. Not really, but so you can see where we are in all these markets. You can see we're approaching levels that are, you know, extreme, and we've come off those a little bit. So we'll have to see if we can keep it going. But this is a really cool indicator. We actually have this. If you're a NinjaTrader user, we have this for free on our website. You can check that out. I'll put a link in the description for you. And I find it pretty useful. So let's look at the VIX now. This is what I would use if I was going to trade the S&P. So on top we have the S&P, on the bottom we have the VIX. Now a couple of things to note here. I like to trade the VIX when I'm thinking the S&Ps are going to, you know, change direction, because it's a good indicator for counter trend, and you can get double-digit returns pretty quickly. So a couple problems with the VIX here. We have the VIX in the low teens, and it got down in the 11 area, you know, when we hit that high over here. And that's not so healthy. When the market is that low volatility, it's got to snap. 15 to 20% is usually a good area for where it should be, and we're far too low for that right now. So I'd like to see the VIX get a little bit more volatile. Heck, if it gets lower, then I can't resist. I'm probably going to have to counter trend that one and go long the VIX. But you can see, you know, how quickly it can pop. Even though the market itself didn't fall down that far, the VIX took a pretty nice pop, and that's a very decent return in a short period of time. So definitely do check that out if you are interested in thinking of different ways to trade this market, because it's kind of a sideways deal. But if it gets a pop, you know, it's a pretty decent pop. So anyway, that's our analysis for today. You can find more analysis at toptiercapital.com. And yeah, thank you for watching and happy trading.